Hey everyone, welcome back to Corporate Decoder. Today we're diving into Joby Aviation's latest filing, and let me tell you, it's a bit like waiting for a flying car. Lots of promises, but are we really taking off? Let's find out. Joby Aviation wants to authorize a lot more stock, tweak some ownership rules to deal with foreign investors, and limit the liability of its officers. It's like they're prepping for anything and everything, but are they covering their bases or just making things more complicated? This document is basically a proxy statement. Think of it as Joby asking its shareholders how they want to vote on some important changes coming up at their annual meeting. They need stockholder approval in order to execute their plans. First, there's a note from the CEO inviting everyone to the annual stockholders meeting in June. It's a virtual meeting, so no need to book a flight unless you're hoping to hitch a ride on one of their aircraft, of course. They're asking everyone to vote on some important items. The main things up for vote are electing directors, which is like picking the team captains, and ratifying their accounting firm, which is a fancy way of saying approving who checks the books. There are also a few interesting changes to the company's rules they want to get approved. The company is soliciting proxy statements, which means they're trying to get people to vote their shares. They highlight a merger from back in 2021. This merger is how Joby Aviation Inc. actually came to be. It's how they got their current name and consolidated operations. They are explaining why people are getting this proxy statement. It is because the board wants your proxy. They want you to allow them to vote your shares for you. They are making materials available online to save money. The main things up for vote are electing directors, ratifying their accounting firm, and a non-binding vote on executive compensation. They also want to make some changes to the certificate of incorporation. Different proposals require different levels of approval. Electing directors just needs a simple plurality. Approving the accountants only needs a majority of votes cast, but some of the changes to the corporate charter, those need a supermajority vote of at least 66 and 2/3%. Time to talk about the nominees for the board of directors. These are the people who will be guiding the company, at least for the next few years. We have Michael Huerta, former head of the FAA. Having him on the board could definitely help navigate the complicated world of aviation regulations. Then there's Tetsuo Ted Ogawa, a big name at Toyota. Given Toyota's partnership with Joby, having someone from their leadership provides a strong link and a lot of expertise. Finally, there's Dipender Saluja from Capricorn Investment Group. He's been with Joby since their early days, so he knows the company inside and out. Let's take a peek at what the non-employee directors get paid. In cash, they're pulling in around 50-75k, but more importantly, they get big stock rewards. Ek A. Evans and Laura Wright both get over 220k in total compensation. This is all pretty standard for a company of this size. The board members are doing quite well. Next up is ratifying the appointment of Deloitte and Touche as the independent accounting firm. Basically, it's making sure the shareholders agree with who's checking the company's financial statements. The audit fees were nearly $2 million last year. That's a lot of money to make sure the books are in order. Audit-related fees were at just around $350,000. This is a non-binding vote on how the company is paying its top executives. It's basically a way for shareholders to say whether they think the executives are getting paid too much, too little, or just right. Now, this is interesting. They want to increase the number of authorized shares of common stock from 1.4 billion to 2.8 billion. It's basically doubling the amount of shares they can issue. The main thing to note is that it won't dilute your current holdings immediately, but it gives them a lot of flexibility to raise money in the future, which may result in dilution. This proposal relates to ownership requirements of US air carriers. Basically, they need to make sure that foreigners don't own or control too much of the company, or they could run into legal problems. Why this change? Well, it seems Joby has some international partnerships and investments, and they need to make sure they're complying with the rules. This is about limiting the liability of the company's officers. It basically means that certain officers won't be held personally responsible for certain decisions they make while doing their jobs. This kind of protection is common in the corporate world. Why do this? To attract and keep talented people. Who wants to be an officer if they could be sued for every little thing? This is a pretty standard clause. Now, who owns the company? Joe Van Bever, the CEO, has a big chunk through various trusts. He has about 12% of the ownership. Paul Sciarra is at around 7.4%. Then Toyota Motor Corporation comes in at 10%. Here's a list of the key people running the show. You've got the CEO, the Chief Product Officer, the President of Operations, and a few others. These are the folks making the day-to-day decisions. This is a note from the committee that decides how much the executives get paid. They're saying they've reviewed everything and think it's all good. This section talks about how the executive compensation program is set up. It's all about attracting and retaining talented people. They're trying to meet a goal of certifying their aircraft and launching air taxi services. That's the big picture. To align with the shareholders, they weight their compensation heavily towards equity. Base salary is meant to provide fixed payments. Then there are restricted stock units upon goals and service-based RSUs. All these things together should keep the executives happy. The CEO is making $639,000. The CFO is at $535,000. It is important to note that this is a very expensive company to run, so they will need a large runway. They grant 3 types of awards to keep their executives. They have service-based RSUs, 2024 PSUs, and LTI awards. In February, each of the executives was granted service-based RSU awards that will take a few years to fully vest. For Joby and Bevitt, this award consisted of 2,641. In February, they adopted this PSU program. Employees can get RSUs based upon achieving some pre-established goals. Under this PSU program, Joby got 42,458 units. To further incentivize for the long term, in February, they granted long-term incentive awards. They will earn and vest annually over 3 years, depending on the earlier mentioned PSUs. The executives also get retirement savings benefits and health and welfare plans, just like any other employee. They also approved one-time bonuses to relocate to where the company needs them. To keep the leadership aligned with the shareholders, the insiders are prohibited from participating in any transactions involving short sales or put or call options of the company. Joby and Bevitt's total compensation is over $3.7 million. There seems to be a significant amount of compensation that is in stock. It is important for the executives to maintain stock value in the company. This table outlines what options haven't been exercised and the stock awards that haven't vested for the named officers. This shows us what happens to all these unvested shares if the company is acquired. The CEO pay ratio is 21:1. That means the CEO makes 21 times what the median employee makes. The annual total compensation of the median employee is around $177K. This is high, but makes sense for a company where the CEO is the founder and visionary. We have a handy table which will allow us to compare different compensation metrics with income. The CEO's summary total is around $3, around $310.7 million, and the average for other non-CEO NEOS is around $3 million. This is all mostly for 2024. Net income is negative at negative 680 VAS, is around $3 million. This is all mostly for 2024. Net income is negative at negative 608,034. This is the amount of shares of stock which can be issued to employees and directors. There are around 51 million to be issued upon exercise and 95 million available for future issuance. There might be a conflict of interest as the CEO is affiliated with Joby Trust. This trust holds ownership of entities providing services to Joby. The rent of office space and related utilities totaled around $600,000. The audit committee has reviewed the financial statements and is saying everything looks good. These people are in charge of making sure the books are legit. The company believes all reports of ownership were met in fiscal year 2024. Takeoff here. Joby Aviation is making big moves to prepare for the future. They're shoring up their legal protections, incentivizing their executives with stock, and getting ready to raise more capital. But let's be real, the negative net income might be concerning. They're still burning through cash and relying on future goals, but they have large cash reserves at the moment. Overall, Joby Aviation remains a high-risk, high-reward play. They're betting big on the future of air taxis, and their success depends on a lot of things going their way, like obtaining regulatory approval and partnerships. Thanks for watching. If you found this breakdown helpful, please like, comment, and subscribe for more corporate deep dives. And let me know in the comments, do you think Joby will actually get those flying cars off the ground? I want to hear your predictions.